Welcome to Uplink, where we explore the world of digital infrastructure, uncovering the technology fueling AI and cloud innovation with the leaders making it happen. We're here in London, of course, and I had to catch up with Ben because Ben's been doing a whole heap of cool stuff all across the GPU space. I think I've been following you. I don't know how long you've been pumping all this interesting content out.
It's been probably a couple of years at this point.
Couple of years, yeah. And you sort of followed this journey of the explosion of, I guess, training and GPUs and usage of NVIDIA chips. And then also, I think you've got a much more focus around Europe and a much better, I mean, we spend our lives everywhere, but your insights into Europe is really fascinating. So I'd love to unpack just what you've seen change, where we are, any insights, any predictions of what's happening. And
absolutely.
And I know you got a very big play on the finance side of things as well. So I'd be curious to just sort of unpack some numbers in your mind around what you think makes sense or how things are getting financed and contracted and if that's changed at all. Or
absolutely.
Yeah.
So, and Europe's a really, really interesting market at the moment. Obviously, like for the past couple of years or so much of the focus has been on the US. So there's the multi-gigawatt sites here, or like there's the Meta Hyperion deal, which is the same size as Manhattan, or there's the Project Stratos recently, which is double the size of Manhattan because apparently now Manhattan is a standard index unit of measure for data centers, right?
Yeah, it used to be football fields, now it's Manhattan.
Right? So how many Manhattans is your campus going to be? And it's
a friend of mine worked on that actually. From Meta. Yeah, it's really cool. He was sort of the came up with the concept.
Yeah. I'm here for the name, right? Like Hyperion and Prometheus. Prometheus being the titan that stole fire from the gods and gave it to humanity, right? Like and then Hyperion's like the light bringer, which in the context of AI is quite an interesting one, right? But whoever came up with that name, I think they deserve it.
So what is that? So what as in Prometheus is what, the name of the data center?
Yeah, so there's Prometheus was the 1 gigawatt site, and Hyperion's the 5 gigawatt site, which again, when you think about it, right? Which is like,
so that's Meta, is it?
Exactly. So that's Meta. Yeah.
What would be, is that the largest that we're like 5 or something? I don't know. You can't go much bigger than that, can you?
I mean, I think Nscale's recent land acquisition.
What did they say?
8 tower or something. That's 8, and then there was Fermi America, which was meant to be 13 gigawatts, I think it was, but there's a whole lot going on with that. From exits from CEOs and litigation and all kinds of stuff that's going on there. But yeah, I mean, so that's the American market, right? It's these massive deals that Europe just cannot do in the same way because we don't have a spare 5 gigawatts or 8 gigawatts or 13 gigawatts lying around, right? Which means that the smaller pockets of land and the smaller pockets of power that have typically been overlooked up until this point, right? Because it's been very much hyperscale driven.
Yes.
Whereby you've got the big
AWS, Azure, GCP, buying,
right.
For their own cloud
all going via the bigger neo clouds to assist in that procurement, because ultimately they can only deploy so fast and demand is so high. They need those deployments, like the CoreWeaves, like the Nebulouses, the Nscales, right? And from an economies of scale standpoint, it doesn't make sense for the hyperscalers to go below a certain level, and then it also doesn't make sense for the bigger neo clouds to go below a certain level, because there's the same dynamic that you have with the hyperscalers procuring through the neo clouds for certain capacity. You end up with the same situation, right? Where below, like, I don't know, 40 megawatts or something, it doesn't make sense to allocate the time. So there's all of these.
So that's what you're saying. Yeah, I think that's the feedback we get is hyperscalers don't want to look at anything below 40, 50 megawatts, which is kind of like how we sort of fit into the puzzle. We sort of fit this. We could do sort of 2 megawatt and below. It fit in the cracks, as they say. Yeah.
Which is a really interesting size.
Yeah.
In the UK, in Europe as well, because there's distressed assets, commercial assets, old industrial assets.
With access to power.
With the grid connections that potentially become interesting at that scale if you're able to monetize it, and that is ultimately then dictated by, like, can you finance it, right? Because 2 megawatts is a large amount of capacity, but while the returns on paper can look interesting from like an IRR standpoint or from an NPV standpoint, right, the absolute return typically isn't high enough for
the investment,
right, or for the
to retrofit it, you mean, or to build it out, or
generally, unless you've got some sort of anchor contract, which means that the economics are viable from like a cost of capital standpoint.
Yeah, okay.
If
Which is
you're-
the game that we're sort of
Yeah.
talking about is really financy. Like
Yeah,
it's
yeah.
all about like how you finance these things. I
Exactly.
think. Yeah.
Exactly. And
Um,
those deals are difficult to construct, right? It's very, very large amounts of money, like 50, 60, 70 millimegawatt potentially, depending on the hardware generation. And then there's all the supporting costs, and it'll be like typically 15 to 25% of gross revenue for non-power OPEX. And then power cost ends up feeding into, making the margins potentially very thin if you're only offering bare metal. And then if you're offering like 2 megawatt site with all of those costs factored in, plus 10, 12, 15, 17% cost of capital on a 3-year loan, whereby there's some very aggressive amortization taking place. That does not leave an awful lot of room to then actually be able to pay for the business to make things work, right?
which I think is what originally you were sharing a lot of numbers, and it's like this doesn't even make sense. I think is some of the pieces of the puzzle that was really interesting. So that I guess have you seen a big change recently? Like we've seen a big change since sort of Opus or the launch of Anthropic's Claude coding in sort of late December, and then in January it all sort of took off, and these agents took off, and so we've got all these customers from an inference standpoint that have just gone through the roof in terms of revenue, and we just saw basically only a few winners. It was like Anthropic and OpenAI were the ones actually getting income or revenue. NVIDIA was winning everywhere. And then you had the hyperscalers and so forth providing, in effect, GPUs for those. So they were all getting, the revenue was sort of staying in that space. But what's happened since, say, January, February, March, is it's sort of come down the next level, and there's a whole range of companies that have just exploded from an inference standpoint. So that is kind of very different for the last 3 years that we've seen, at least, which is why we've sort of landed in that inference cloud space. We see some tremendous value that we can bring by being in all these countries and being distributed and all those factors, and not having to have training platform, i.e., a gigawatt campus with every GPU running exactly the same moment. And then, so it's, super hard to build that, which is why I think a lot of these interesting companies, particularly in Europe most recently, have all popped out of nowhere, really. Maybe give us your perspective on how that's all playing out.
Yeah, so
These companies are,
it's been the way that the market has developed for the past couple of years is really interesting, right? Because we've gone from being basically a supply-led market, right? Whereby in 2024, you've got a few players that are deploying massive amounts of capacity across Europe. Northern Data being one of them, 22,000 H100s online, massive capacity, massive fleet across Europe.
And who is using them then? Who is their
Typically
customer?
training at that point, right?
Okay.
So big training customers who need those big clusters.
And they're US companies or
US
European?
companies, some European companies, so
Yeah.
Mistral, for example, right?
Yeah.
They do have their own family of models, but
Well, Mistral seems to be the
But now they're an
exemplar,
LTP,
yeah.
right?
Yeah, I saw that as well,
Exactly. So
yes,
now they're procuring their own
Yes.
hardware, they're
Yeah.
providing supplying their own compute.
They probably,
I'm sure there's something interesting that's gone on there in terms of like how the NVIDIA relationship works.
yes,
That
Well,
is
they
often the
probably
case,
have to
right?
shore up their own supply.
And that's exactly it.
I wonder whether they needed to get into this space, or as in they wanted to get into this space, or they actually just had no choice. Maybe that was what it was. Not sure.
The way that this market is developed, right, it's vertical integration seems to be the way to go. Because if you're, again, back in 2024, right, you're trying to get hardware that hasn't been broadly financed online with exotic financing structures, so like the first GPU-backed deals that CoreWeave did, for example, right? Interesting way of doing things, hadn't been done before, and these companies are also new at that point. What are they doing? They're having to deploy into co-location data centers, right? And that is a massive cost center, right? At the time, demand wasn't anywhere near as high. GPU prices fell from, what was it, I think $8 per H100 per hour down to $1.70 over the course of a year or so. And when you've brought stuff online at 15 to 17% cost of capital, and you've built your projections around $8, and then all of a sudden the bottom has fallen out of the market, that doesn't make things easy.
What do you think that was? Because now all of a sudden it's reversed as well. So
Use cases, right? And I think
So was there an overbuild of H100s or something? Even maybe the use case that wasn't there yet.
Potentially. Maybe there was some overestimation of how capable the models were going to get as quickly as they did, right? Because like back in 24, it was what, GPT-3, GPT-4, relative to the capability of the stuff that we've got now. It's like it's not the same, right?
So it's almost the whole market's matured in what is a couple of years, which is kind of funny. Yeah,
it's insane when you think about it. But then I think to Mistral's point, right, like why have they done it? It's the same thing that a lot of the neoclouds are doing. They're no longer building or going into co-location data centers unless they have like massive demand and they need to fill it right now. A lot of them are typically building their own facilities. Why are they doing that? Well, you've got more control over your supply chain, you've got more control over your costs, and then if you're deploying modular, for example, right, your build cost per megawatt is going to be significantly lower.
Modular being like
it's like containerized
containers, yeah. Exactly. So they are significantly better priced.
Yeah. So you have 8 to 10 millimegawatt, including civils, versus 16 to 18 per megawatt if you're going for the conventional.
Okay.
Plus much faster route to market.
Yeah. And it does make sense. I think in Europe that would make a lot of sense because there's so much, like I'd say, power that's all, there's wind farms everywhere. There's all these like renewables all over the place. Yeah. Getting behind the meter, I suppose, and getting access to that. Do they still get grid access as well, or does it like when it's not windy there? And
so I mean that's part of the bottleneck. And like European grids are slow.
Yeah, they're slow everywhere, but yeah, I think
from
here is
standpoint, especially in the UK.
Yeah, Europe and the UK. I think a lot of regulation, a lot of rules and restrictions, a lot of eco and sustainability acts that have put in place, which may have made sense, but it's making it very hard to compete, I think, on that side.
But I think that brings us quite nicely back to like why is Europe interesting at the moment, right? Because a couple of years ago, yes, Europe has been really slow to get going, but if you look at the kind of pushback that is now happening in the US, right, around like this DC is going to use however much water per year, the impact that it's going to have on utility bills for the residents of the area. And I think a lot of people are suddenly warming up to the idea that no, like we probably do need some regulation, right? And that's the way that Europe typically works, right? Stability is generally put over speed or pace of innovation, for better or worse, right? Risk management generally tends to be a bit higher from an environmental, from a social standpoint. And now that there is that pushback happening in the US, the systems to navigate that kind of pushback in the US don't really exist in the same way, right? You don't have that kind of, I don't know, class action litigation, for example, or pushback against data centers, the way for corporates to engage meaningfully in that way, the systems and processes that you might find in Europe possibly don't exist in the same way. So Europe is an interesting market at the moment because while there is regulation, the regulations exist. They're a burden.
But when you tick the box, you're free.
You tick the box, right? And the fact that those regulations exist tend to mean that if the regulatory requirements are met, there's probably going to be a little bit more community buy-in.
Got it.
In the same in a way that you wouldn't necessarily get in the US, which means that potentially, in this instance, maybe things in Europe can move a little bit faster. Now, that being said, it's obviously still going to be American money that ends up paying for the majority of this because the US markets are much deeper. There's a lot more liquidity, and the European market is very fragmented. But things are moving in an interesting direction at the moment.
Yeah, I've been on this world tour. So I've been to Milan, Paris, Bologna. One of our customers is Lamborghini. That was pretty cool. Then we went to back to Milan, then did Zurich, Frankfurt, Paris, and then London. And everyone's sort of, it's interesting just to get different perspectives. We got a financial services customer, one of the big ones in Zurich. In Paris, that is using a whole heap of GPUs for trading purposes. So they actually got their own models that they're using for trading, which I found really fascinating. It's the first time I've started to hear a lot of enterprises actually leveraging GPUs as opposed to just US-based sort of AI firms in effect. So I think that's the first example I've started to see where it's proliferating out to traditional enterprise-style finance companies using their own GPUs and their own models and what have you for their own purposes. And then the other piece is a huge number of these companies that are then helping coders code, or particularly from an inference standpoint, the importance of becoming closer to their users is happening. And so the rollout is
We're in a
happening.
good spot at the moment.
Yeah. The rollout's definitely occurring right now in the US because the adoption's so strong there. But as soon as that adoption pushes through, I guess it's like, Facebook users and so forth, you obviously need all the inference here. So as this progresses down, ChatGPT, Anthropic, all those, you're going to see huge builds that have to be here as opposed to are here because it was easy. And the other thing I get, and this is what I want your perspective on, so many random people have told me, oh, there's all this power in Glasgow, there's all this or something because of, I don't know, maybe there's wind farms, I don't know what's up there. And Sweden comes up a lot. So there's lots of random locations that were sort of brought up as where these data centers are building. Is it because they've got, Norway maybe? I don't know.
So Norway, huge amounts of
Power, is it?
happening in Norway at the moment. And ultimately, it's because power is cheap.
Yes.
Like really, really cheap. Norway's an interesting
So literally it's just following the cheap power in
cheap
Europe.
power.
And somewhere they can get a-
building, permitting,
Yes.
that sort of thing. Norway's interesting because the grid is very hydroelectric.
Yes. Okay.
Heavy.
So it's all high. Okay.
So renewable as well. And there are lots of interesting sites that are miles away from anywhere, which from a large data center build out standpoint, you're not necessarily going to get the same kinds of pushback. Now, whether or not they're too far away, so to your point around customers now needing their inference endpoints to be closer to the customers, if you've got multiple gigawatts,
probably
like up
not
in
too far.
northern Norway,
Yeah.
depending on what the networking and the latency ends up looking like, maybe it's suitable for some use cases.
Yeah,
right?
probably not voice,
Exactly.
maybe, but yeah. I think the answer is, though, if you can't get it here, then the second best is there, as opposed to trying to push it back to the US or something.
Yeah.
So
Yeah.
where was it the Nebius and Nscale?
Yep.
They had some massive announcements. Where was
Yeah,
that?
so Nscale have got a couple of facilities in Norway. Nebius have got
What was that $8 billion thing?
which one?
Oh, I don't know. There's too many of them. Actually, it's become...
So Nscale have also got something in Portugal, I think, at the Start campus in Sines. Nebius have got something in Finland.
Yeah,
Quite a
that's
large
the other one.
facility.
Finland.
Their headquarters
What's in
is in-
Finland? Cheap power
again.
again.
More cheap power.
What again? Is it?
The Nordics are really interesting. Just from the way that
They got heaps of oil, I know, or at least Norway's got plenty.
Cheap, plentiful power. Which is
it's become the answer.
Yeah. I mean, again, like margins have been historically so thin because it's GPU per hour and demand has been limited that the places where you can maximize your margin, ultimately power is a huge part of OpEx, right? Given how power hungry these large scale deployments are. So it makes sense that that's where exactly, right? But then I think as we move from GPU per hour rental to token-based revenues, right, which ends up becoming a little bit more like a utility. In that scenario, then sensitivity to power becomes less because revenue potential ends up being so much higher on the token consumption basis. It ends up looking a bit more like the Xerox copier model, right? You're paying per copy as opposed to paying for the machine. At the moment, people are paying for the machine, then having to pay up for the copy on top, right, or for the deployment on top. But then if you're able to just consume tokens and point intelligence at things, then it's a very different operating, very different business model.
And are you seeing many folks go to that model yet, or is it still at the moment they're really contracting the whole machine out? And that's probably a function of the finance, I assume. Like when you look at CoreWeave, I mean, their CEO will constantly talk about wrapping, a AAA credit rated company up with a $5 billion deal, put all the components into it, lock that, and that's one thing, and then moves on to the next. And so I guess that's harder if you're saying I'm a token generator, unless you are contracting the number of tokens out, but then you're really just contracting the compute in effect anyway.
Exactly.
So it's just a different way.
I think that at the moment, for these large scale, like really large scale build outs or like massively distributed clusters whereby you can have like a server at the end of someone's road, for example, that then serves that local area.
I saw that.
You need to be able to finance that on a
We don't know who
on
the
a
customer
100%.
is.
Exactly.
Yeah.
So it has to be
Yeah.
on a 100% debt basis, and you need to know that there is going to be enough diversity of customers there that the fact that one of them by themselves isn't necessarily creditworthy isn't a problem, because in aggregate you have basically
It's
enough
exactly
creditworthiness.
like an internet connection or whatever. Yeah.
Yeah,
You're not really that worried. Yeah.
but we're not there yet,
No.
right? Because the consumption's not yet high enough, and potentially even like the use cases aren't yet compelling enough.
So
to
the
be
other
able to do
piece
that.
is, because I was just thinking that through, like let's say it is tokens.
Mhm.
If you're ChatGPT or if you're Anthropic, I presume they're really creating their own tokens today. Do they have an ability to just take a token from some random location, or are they really needing to bring their model and run it back on a bunch of GPUs? You know what I mean? Is
But that's
is
exactly
token
right.
really that?
So you've got the input versus the output tokens, right? So you deploy a model, and then Anthropic's pricing, I think, is a really good topic at the moment, right? Because you've had a number of different customers who've spent hundreds of millions of dollars because someone gave the entire organization access to the
went
API with
nuts.
absolutely no limits, and they've spent $500 million in a month. That sounds difficult to deal with, right? But like, a lot of the models have now got to a level whereby there isn't much that they can't do, right? But then every time you ask a question, that's going to be consuming input tokens. Every time there is an outputted answer, that is going to be the output tokens. And there's a price point for the input, and there's a price point for the output.
Sorry, explain that. Input being?
You type something out, you fire it in, and then when it ingests your question, that's processing the input tokens. When it's then reasoning and then outputting the answer.
Oh, I say you break them into the two
Exactly,
components.
and they're priced at different points.
Oh,
right?
is
So
that right?
Fable's just been released. It's $10 per million input, $50 per million output, right?
Wow.
Which is potentially pretty pricey pretty quickly, right? Especially if you've got it.
So it's like you can feed as much as you like in at lower cost.
Yep.
But I see what you're saying. So if you feed it your own written dossier or
exactly.
Build me a business plan based on this or
So
whatever.
it ingests it and it figures out what that is. There's going to be a cost associated with that. And then when it thinks about the answer and then it outputs it
a bit more.
Then it charges you
because it's smarter than you, so therefore
exactly. So that's where the value is, right?
That's to charge more for its own thinking.
And like
it's actually valuing my thinking.
Exactly.
And not highly.
Yeah, he's like, I now know where I stand in this relationship.
That's fascinating. Okay.
But that's the token basis, right? So that's where the billing works there. And if you think about it, there is an economic value associated with one of those tokens, and it's a bit like a unit of thought, or like a way of attaching a dollar value to a unit of intelligence, right? Which you could probably then make as an argument, a pretty compelling argument, that it's a utility, right? In some way, you can point intelligence at things, and then there is a cost associated with that.
And you're saying it's a lot more, it's financially better to try and get into token economics versus?
I mean, over time, it's yes.
Yeah.
If you
your margin's higher.
If you run the numbers.
So what's the difference between producing tokens versus just the hardware element to it?
So the models are going to be running on the hardware, right? And then you can run that model on the hardware. You can rent out the GPU, and that's going to be, I pay X amount per unit of time for this time-bound bucket of math that I'm able to do, right? Because this GPU can do X amount of computation, but like computation in and of itself doesn't necessarily have any economic utility, right? But then if you're running a model and that model is intelligent and there is economic value attached to the output of that model, right? Yes. The computation then also has value, and then the tokens are the result of that computation, and then there is value that's associated with that. So you're further up the stack, and because you're further, it's like refining crude oil into a more valuable product, right? It's a similar kind of idea.
And so if you think, all right, I've got my platform. We actually had model as a service. We actually launched it. We ended up selling our GPUs, so our customers ended up preventing us from launching our own product, which we will bring back online shortly. Yeah, but it's, I guess, how does it, if you want to run the model, so let's say, I don't know, we pick a model, I assume it's not OpenAI's and Anthropic's model.
So it could be, I mean, if you're servicing Anthropic as a tenant, it's going to be the same thing. It's just they're capturing the value from the tokens that are being generated, right? If you were to deploy Quen or something like that,
which is more of the open
which is an open source model, then you're the one who's capturing the token economics instead.
And then then there's this fine tuning I've heard. So where they optimize or they fine tune it to make sure that the GPUs that you've got running beneath the model is, I guess, tuned to be more performant. And
So
what
you
does
can go
that
in both
mean?
directions, right? So
Yeah.
you can optimize the hardware environment so it's more efficient, your utilization is higher, which basically means that you're using
What are you doing?
more
You're
of your
actually
power.
optimizing the hardware for the particular model because it just
So the software and the orchestration layer,
okay.
right? So going down into basically the guts of the GPU and making sure that the workloads are running efficiently such that any power that you're spending running the GPU is then also running the model, right? So you're getting some economic value out of burning power effectively, right? And then the fine tuning going the other direction, you can take an open source model off the shelf, and it will be a snapshot of whatever the training data was, right? So some of the older models, you'll ask it, I don't know, a time-bound question like who's the prime minister in the UK or who's the president in the US, and it will come up with like Biden or
Yeah, whoever
or
was,
something, right?
yeah, when it was
Whoever
trained.
was at the time because of when it was trained.
Yeah.
Fine tuning is a way that you can take potentially some of your company data or some data that is specific to you and then refine what the model knows by adding more data to it.
Reteach it in effect.
To a certain extent, yeah.
Or add more
Which means that it's then
context.
better at a given thing because
Yes.
it has more domain specific knowledge and you can do that after the
Yeah.
fact. Which then potentially increases the utility of that model in that specific domain.
Is that like a good example where a law firm might say,
Yeah.
I want to now train this specifically
Yep.
on legal blah, blah, blah.
Yeah.
Yes.
Yeah, exactly. Or you can go one step further and you can start looking at like truly domain specific models, right? And this is one thing that's been quite interesting to watch over the course of the past really 6 months or so, because up until that point, it's been text-based models or video models or image models, which have general utility. And these are general utility models. Anyone can use them and they know a lot about everything. In the past 6 months, we've started seeing more neolabs evolve or appear, right? Who are building more domain-specific models. So Basecamp Research, for example, they're a biotech company that's based in London. They've got more genomic data than any other company on the planet because they've spent the past decade or so
they have
in the
this
field gathering
special data. Yeah.
So they have all of this
Yeah.
data and they're training biology-specific models on genomic data.
That's cool.
Right?
Yeah.
So instead of it being just like text from the internet or whatever's been scraped from wherever, right? It's proprietary biological data on DNA, on genomic sequences, and that becomes really interesting.
And that's they want that as a private model, obviously, I assume, so how do they figure out who to run as a private model?
So I mean, so they built that from the ground up.
Really?
Exactly. So biological, genomic specific model with all of that data as the base parameters, and then train that model from the ground up. So instead of it being a large language model per se, it ends up being like a large genomic model, right? Which is then trained just on biological data. Luminary have done similar with like physics-based models. Other world models are starting to appear now as well, which are looking at physics too. So then you can get into things like material science and that sort of thing, which is a hell of a lot more interesting than a chatbot, right?
That's what, I guess the kind of funny thing is, all of what you just referred to as the promise of AIs, and that's what's coming in theory. When are we going to have these physics breakthroughs or these, everyone's like, when are we going to solve cancer? When are we going to do all these pieces? So I think in sequencing, we actually had quite a long time of okay AI use cases, like, the ChatGPT example. And it solves a problem. It's like helps me. I don't know. I've got this fridge. I need to fix something. But it steps you through it. It's probably more akin to like a Google in the past. You just took a lot of effort out of it because it solved for it. We saw coding take off, I think in December, and then it's just gone crazy through the roof. So the use case is actually literally amazing and adding huge value to companies, so costing a bit as well, but it's adding huge, tremendous value. We see it in our business, just our small company. We've got something like 90 developers. I don't know what they've probably 10x'd what they can deliver, and that's going everywhere. What's the next use case that we expect to sort of see really take hold?
You can make an argument that cybersecurity is it, right? With the mythos.
Yeah. What's your view on that one?
I mean, it's good marketing.
Yeah, this is
Pre-IPO, it's very good marketing, if I'm being cynical. But I mean,
I've
that
heard,
models
like
are
you say, it's all like it's genuine. As in,
exactly,
yeah.
and again, never waste a crisis.
No, of course, yeah.
But I think that you could probably make an argument that Mythos is the Claude Code moment, but from a cybersecurity standpoint, right? Is that okay? These models are now good at this thing as well. Oh, they're also good at this thing, and it's gone from being just like chat to coding to now cybersecurity, and then that seems to be the cadence in that they're very good at most things, and then all of a sudden they become incredibly good at another thing as the capability increases. And I think cyber is now. Physics could be next, potentially. There's lots of interesting companies doing interesting work in the physics model space at the moment. And then physics ultimately unlocks an awful lot of other stuff.
Totally, yeah. And then obviously, yeah, if that genomics example is, surely you would think AI would be incredibly good at deciphering through thousands and thousands and thousands of pieces of data to then link together the pieces of the puzzle that we're all missing to give us, the answer, or even produce a human specific, like a me specific drug that's related to all my details or whatever. Like
personalized medicine.
Personalized
medicine and drug discovery is one of the potential applications of these models. I think that's something that Basecamp Research are looking at the moment, is the applications into pharmaceuticals, drug discovery, that sort of thing, which is fascinating.
So you started I saw your posts, and then you started a newsletter.
Newsletter, indeed.
How often does that come out?
Yeah, so I started the GPU.ai in December 24, and if it all falls apart, then that's a nice domain to be sat on to probably sell to someone at some point in the future.
But you weren't just writing what you were seeing.
Exactly. So super simple format, which made it repeatable for me, but then also gave me an incentive to keep up with the market of a top story from an editorial standpoint, a market move, which could be a funding round or an acquisition, something neocloud related, something model or software related, something hardware related, something hyperscaler related, and then something data center related. And I've done that every Saturday since the beginning of December 2024. I've not missed an issue yet.
Really?
Yeah.
Good on you.
I think it's issue number 110 is going to be out tomorrow.
Awesome.
Circa 4,100 subscribers,
which is a lot in this space. Yeah,
52% open rate, 6% click through rates, which for niche B2B,
it's amazing.
Pretty good.
I mean, 50%. 50 people at 2%. I don't even know. I think my emails are probably lower than 2.
But it's been an interesting way to give myself an incentive to keep up with what's going on. Because there is an awful lot
motivates you to stay across it as well.
Exactly. Yeah, and then
then other people can digest what you've had, so it's helpful.
Which you form a perspective and like the way that the market's developing, because I've kept up with it, and then with things like Claude Code, right? You build tools that allow you to do it more effectively. So I've got engines in the background that are pulling in every single press release from every single major company from across the space, running it through some analysis, and then turning it into a graph of the industry. So like who's buying from who's selling to who's investing from who, mining filings from the SEC as well, all just sitting in this, as right now, a very inefficient Supabase database. But there's all kinds of interesting insights that you can pull up with this. Hiring signals are interesting, GPU pricing is interesting, and then ultimately it's a case of, right, what does all of this mean, and where is it going, and why is it going in that direction? And then if you then take that data and you feed it into your basic Excel financial models to then interrogate what's going on, right? Because every single one of those decisions is a business decision. What lever has been moved in one of these financial models, and then what does that mean for the business going forward?
And so I think that us, like, business models were always great, because you'd say, there's a 5-year plan, we're going to execute the 3 years, and then, but it's almost like every month it's changing. So what, so I think it's super insightful for people to try and pivot. I said to someone the other day, they were like, who do you think's the winners? I think the winners are going to be the folks who can pivot the fastest, because even if you're a winner today, it can change. Yeah. What you need to do is pivot very rapidly to wherever the puck's moving, as opposed to where it was. And that's why it lends itself well to a lot of faster moving companies, as opposed to a monolithic sort of giant company that's just, by the time they've thought to do something, it's already moved. And the strategy, even they're chasing the wrong thing all of a sudden. We've seen it just change so rapidly, just in the compute space alone. just in the last 3 or 4 months. So
I mean, yeah, because your business has changed quite a bit in the past
Flip.
3 to 4 months from the Latitude acquisition, to
Yeah.
the storage side as well,
Yes.
right? Like,
Yeah.
why? What was the impetus on your
Or
side to move more from the networking side to then
yeah.
to see the opportunity? How did you see the opportunity?
I had this, I mean, we've been following Jensen for a long time. I had this belief that inference was going to come at some point. Albeit it took quite a lot longer than I thought. Weirdly, things move fast, but just training has been the use for so long, and then the inference, I suppose, was only going to a few companies, and I didn't think it would flow. I thought it would flow through sooner. I actually thought enterprise would have adopted it sooner. I thought a few more pieces of that puzzle would have happened quicker. Probably should have thought through that. And
I think a lot of people thought. I thought the same.
yeah,
I certainly thought
at
the same.
that time, because it's actually been a while. It's fast and it's slow at the same time. It's like watching full self-driving on a Tesla. When it first came out, I'm like, my kids are never going to have a driver's license. As we're approaching that, I'm like, well, maybe they're going to have to get a driver's license. So I think I probably predicted one piece of it. Well, for us, what we do, we spend our lives connecting companies from data centers to clouds, between clouds and between data centers, and all the other elements, so internet and IXs and internet exchanges, and then we sort of followed the bouncy ball of products. So we keep adding and innovating products along the way to solve our customer problems. Everything that we did was built from an automation standpoint. So we automate physical infrastructure in data centers. So if you actually boil us back to what we really are, we automate physical infrastructure in data centers. That's kind of what we do. So if you actually have that lens, from a network standpoint, it's Cisco switches and firewalls and a whole range of network infrastructure. Then there's lots of physical fiber, and then there's racks and cables and what have you in a data center. What we realized was what we were doing is connecting a customer from data center A to data center B, but really it was a server in data center A to a server in data center B, or a server in data center A to a server in the cloud. And so one of our customers was Latitude.sh, and they were pumping all these connections with us, doing a huge amount of network capacity. And I was fascinated by what they were doing. Ended up having this conversation, realized that what they'd built is an incredible automation platform for physical infrastructure in data centers. It just so happened that their physical infrastructure was compute and GPU. And then I thought, well, if we brought the two companies together, we have the trifecta, which is compute, network, and storage. Well, I needed to add the storage element. So we acquired the compute business, which has CPU and GPU. As part of that acquisition, I was like, you need to add storage, which we just launched last week. So now you have super high performance storage, low cost object. You've got object, file, and block, super high performance, and then you've got low cost, like $8.49 for a terabyte, and free egress, no costs to get access to it, and 100 gig connection across our platform. So you kind of stitch the value that we have from the network to these pieces of the puzzle that these customers are trying to solve. So it's like we had this vision around it, and then I thought, all right, well, we will build it over time. We even had sort of a business plan that would say, we even had earnouts for the acquisition, which was sort of over a 3-year period, and all these factors built in. And we thought this aggressive growth if we landed here, and in the last 2 months we 6x'd the size of the revenue.
Hit the 3-year goal. Now what?
We hit the 3-year goal in days, which then throws you're like, oh,
now
okay.
what?
Yeah. So we need to rethink how big we want to go with that, which is where we've done a lot of partnerships with NVIDIA to say, all right, well, let's think more broadly around how can we scale NVIDIA chips globally. Inference Cloud became that piece. So, we were lucky also that we're a publicly traded company, and so you have instant access to capital through the public markets, as opposed to a private company that probably needs to raise that in a different fashion, and
like a project basis, and then there's the equity
Exactly.
to do it all, and then how do you raise the equity? Do you go to an SPV? Where does the risk sit? Is there a parent company? Yeah, it's a whole thing.
Yes. Well, that and the last piece probably before we go is, so for us it's been awesome. But we now need to execute. So we're hustling fast and hard. We need access to chips, which through our partnerships we can get there, because we actually have thousands, like 11,000 CPUs under management as well, and we buy them from the same companies that you buy NVIDIA from. Like NVIDIA is through the Dells, the Supermicros, and all these sorts of cats. Anyway, so it's sort of aligned beautifully for the two companies coming together. Like it was like perfect place, perfect time. And we'll just call it incredible vision from my side. I think I think we had this vision, but the wave came in faster and a lot bigger than we thought. And the good news is we had a big enough surfboard to catch it. Yeah, but the last one is on the finance side, because we've seen lots of companies appear. I call it the finance bros have entered the tech space, and you know when celebrities are building data centers, that's the first part, and then
It's a top signal.
hey,
We've seen this one before. It's a top signal. Yeah.
And then the next one was like, I guess you said it before. It's like a lot of this crypto bros as well are in this space, so they kind of ended up in the right place, right time, because they ended up with power.
Yep.
But did they really know what they were doing from a product side or tech side? I don't know. Or if it's sort of, or they need other people to manage it for them, or they don't. It doesn't matter actually at the end of the day. It's just.
I think it depends, right? Because you've got tiers within crypto. So you've got Crusoe and CoreWeave are great examples, right? So Crusoe was Bitcoin mining with flared gas, CoreWeave from a background standpoint, energy hedge funds, right? And then crypto then ultimately was an interesting way of engaging those various skill sets, and then they've done incredibly well off the back of it because they tend to be financial first, technical second.
Totally, right? and probably the biggest challenge is the financial component.
Exactly. So if you're coming at things with
So
the
if you're a tech
financial
dude,
lens, and then you learn the technical, it's okay. But then if you're technical, and then let's say you're from the crypto space and you're more of a shitcoin aficionado, for example, right? You've been in the right place at the right time a couple of times, which means that you've got some liquidity that you probably have absolutely no business having. Then things
accidentally
probably,
bought a coin that went to the moon. Yeah.
Then you're probably going to find things a little bit more challenging.
Yeah.
Than other.
I guess you can pay your way through. You can go find someone.
But that's exactly it, right? And then you can just hire your way into.
Yes, that's right.
Or you can acquire your way into the game, and there's nothing wrong with that, because at the end of the day, right? Like, it doesn't really matter how you get there.
Yeah.
Right. It's just, are you able to manage the execution risk, the financial risk? Yeah. And whatever other risks are invariably going to present themselves when you're trying to deploy hundreds of millions of dollars worth of hardware in multiple places at the same time, with a technology that ultimately no one really knows where it's going to end up. We just need some GPUs.
Yes, that's the other piece to it. Yeah. It's harder. Well, for us, compute side was easy because it's been going for 40 years, a CPU, and you could always say it's 7-year lifetime, probably run it for 15 years in some instances if you really wanted to burn the thing to death, put a VM across it. GPUs are different. The weird part is everyone's been wrong. And a great example is H100s. We were like, down, no one needs them. 5 years they're dead. 3 years that we don't even know if there's any useful life beyond that. What we're finding is H100s, they don't even make them anymore, are more expensive than they were when you had bought them in the first place. As you said, prices have gone up on them. So yeah, and they're lasting. And what's happening is we're also seeing them last longer. The actual drives in them, like literally hard drives, are failing before, and so you can replace those. So I guess that is different to what everyone was thinking as well. So it keeps changing. It's like the business plan is so hard to have. So that's why I say you've just got to be able to pivot really quickly to whatever makes sense, and make sure you cover off your financial commitments in a period of time, either in the life of the contract or whatever it may be. And hopefully your life of the contract's not a hugely long contract. So yeah, interesting.
And on the data center side as well, right? Like the days of the 15-year one CapEx cycle lease are dead.
Yeah.
Right. Because it's 150 kilowatt racks now, 250 kilowatt racks soon, 600 kilowatt racks not long after that.
Yes.
Megawatt.
Yeah.
2, 5, 10, 30, whatever it's going to be.
Wherever
that, right?
Goes.
And like
so
your single CapEx cycle data center is.
Yeah. That's a very good point. We find it. We have customers asking us for different pieces. The hardest thing I think to find is liquid cooled DC at the moment, because we can find 40 to 30 kilowatt racks, air cooled, enough. But yeah, if you want just a couple of liquid cooled racks, it's very difficult. And the cost to go and retrofit or put some infrastructure in to deal with it is just astronomical. So you end up in this, actually it doesn't make any economic sense. And so what you're seeing is all these companies that just built data centers for their whole life. They're actually you're right. It's actually, it's different now. It really is different. And the density is so different. We've got data centers that just have this huge land, they had a few megawatts, which used to fill the whole thing. Now you just got like three racks. In the, yeah.
Got all this white space and then like 3 racks right in the middle of the room.
Exactly. So how do people follow you? How would they subscribe or what have you? I follow you on LinkedIn. I get the update every week. It's actually super helpful for me.
LinkedIn is the best and only social media platform that I'm using at the moment. Because I haven't had time to learn how to use any of the other ones effectively, more than anything.
How's the newsletter? The newsletter's on LinkedIn.
Yes, the newsletter's on LinkedIn. It goes out there, and then you can also subscribe at the GPU.ai. All lowercase, all one word.
What's the other one? Stack something there.
Substack. I used Substack for a bit, but they take too much of the revenue.
Oh, okay.
So don't take any of the revenue.
Gotcha.
And they've got a nice MCP connection, which makes my life a little bit easier.
Perfect. So you can punch straight out of your...
I'm going to have to make sure that I put my Beehive affiliate link in the show description as well if you want to sign up.
Perfect. Yeah, please. We'll put that in. All right. So subscribe, check it out. And what about your business? You also, what should people contact you for help with?
LinkedIn is the best place to do it, or reply to the email, reply to the newsletter.
And who would contact you? What are you solving for?
So I'm doing a lot of advisory work with investors, with data centers that are looking at this space and thinking, hang on a moment, we've got a nice strong balance sheet.
Yes.
Why are we not engaging with this in a more meaningful way? Investors who are looking at this space, potentially looking at funding GPU deals, but they want to sanity check on the numbers. There was some support with due diligence. I've started working with some newer players who are looking at the market as well. So if you want some advice on how this market operates, what's going on in the market, why things are happening the way that they are, what the potential returns can look like, what a business model looks like, that's where I'm playing at the moment.
And you've seen it all. Oh, that's awesome. Well, I appreciate the time. Great to see you in 3D as opposed to just consuming your content quietly.
Yep, I am a real person. I am not AI. So yeah,
that's right. That's awesome. It's a real pleasure. Thanks.
Pleasure. Good to be here. Thank you very much.
Thanks for joining us on Uplink. See you next time.